I don't think it is. There are a lot of technicals driving that. There's demand for the back end of the yield curve that is persistent as Treasuries issuing in the front end of the yield curve. So I think but I do think that there's something really important around it. I think there is a demand for bonds now. You're seeing it in all the flows because bonds make sense in a portfolio now. Now you have a dynamic where inflation is not scary. You have a Fed that is clearly asymmetric in terms of their perspective. They're not going to raise rates, and if it's soft, they're actually move lower. So bonds work really well in a portfolio, and quite frankly, there are not enough bonds in the world today. And you see this in where bunds are. You see this where Japan is, where JGBs are. So I think there are a bunch of technicals. I think rates work really well in a portfolio. That's why you're seeing this demand come in for it. And listen, we think particularly front to belly of the curve, the 5-year point, it carries extremely well in a portfolio. If the Fed starts to move, it really helps you in terms of your portfolio. So anyway, I think it is that, and I think, but I don't think necessarily the bond market is telling an ominous sign. I think they're technicals, and I think they work really well to hedge your portfolio today.
But if Japan's outlook is weaker for the first time in 3 years, the German economic numbers were horrible. And if growth, GDP now from the New York Fed for the coming quarter is 1.7, maybe the economy's worse than people think, Rick.
So I'd say a couple of things. By the way, I think everything you say is right, except for I also think when you look at the data that came out of the U.S. today and you break it down into manufacturing and services, you see something that's quite real. You see manufacturing that is clearly starting to slow. You see trade data that is clearly slowing. Now, we got to keep in mind that the U.S. is, of the 20 largest economies in the world, is the most closed economy there is. So trade is important, but it certainly doesn't drive the economy. I think when you get underneath the surface, like you say, the German data, the Asian data, particularly, there is sentiment. The Chinese data is soft. That is something we're watching. And could it infect the U.S.? For sure. But listen, I think we are slowing closer to potential or just under potential. An economy that grows at potential at 2% or so, I do think we're slowing, and I do think we're going to slow into the mid ones or so. By the way, I don't think that's a devastating dynamic after you had significant growth last year.
I understand. Can you ask the question? Is it fair to ask as to whether the Fed has already made a terrible policy mistake by hiking all along the way, not realizing the amount the globe was slowing? They hiked into a tariff and trade war that they fully didn't understand the impacts of, and maybe they killed what was a good economy here. And I'm not the only one suggesting that. Hello, President Trump.
Yeah, I mean, listen. I think it was, and I think the chair has been pretty clear about we are liable to make mistakes. I think the December move was not right. I think the economy. I think we called. I think on your show we talked about it, that rates should start to come down, and that we have a dynamic where the Fed shouldn't be tightening into a globally slowing economy, and certainly economy in the U.S. And you see it in housing, you see it in parts of the auto data, some of the manufacturing. So yeah, I don't think they should have done the December, but I don't think that that move was necessarily at the crux of an economy that is moderating off of what was a tremendous tailwind of fiscal stimulus. I think the economy should move closer to potential or just under potential. So I wouldn't blame it on the Fed, but I do think that move in December wasn't right. And by the way, I think what they're doing now is 100% right.
Yeah, but I just wonder if what they're doing now is an admittance by the Fed that they were so wrong. Look how much they've pivoted in such a relatively short period of time, and now this week they did a double down.
Yeah, no, I think the point you make is fair. I think the December wasn't right. Quite frankly, I'm pretty surprised at how fast they pivoted, and clearly financial conditions were under some pressure and have deteriorated. But by the way, I thought that was starting in October, November, and I do think that they're being aggressive at this point in terms of the asymmetric dynamic, that they would ease into something. But listen, I think the Fed's going away for at least a year, maybe longer, and I think that is the key point for a while. Let the economy recalibrate, and I think that's what they're going to do.